Hey guys, this is Sean here from Crypto XL, a company based in Canary Islands that train investors and traders to become profitable in the crypto market. Today in this YouTube video, we're going to be talking about supply and demand zones and how to find the best supply and demand zone as well. So let's get started. So obviously, as all of us know, a supply and demand zone is basically simple. This is a supply zone, basically when price is ranging. A supply zone is formed when price moves up and then moves lower, breaking structure, and we can use this zone as a supply zone. So in simple terms, supply zone is basically the last up move before the big down move that broke structure. That's a simple way to put it. So this creates the supply zone. For a demand zone, is the same thing as well, it's just the opposite. So let's say we have price doing this, and we had a strong down move before a big up move, and then price comes back to the zone and then move towards the upside. So that's the demand zone. This is really good information right here. So pay attention. Make sure to watch the video more than once as well, because this is amazing things that you really can put into your trading and improve it as well. So basically term for a basic way to put this for a demand zone is possibly going to be like something like a small down move before a big up move that broke structure. Remember, keep in mind that I always say break structure. Let me move this demand. A supply and demand zone is only valid if it breaks structure. This can be major structure, it can be internal structure, it's definitely valid as well, but it has to break structure. This is a supply zone, this is a demand zone. Now, if it doesn't break structure, let's say price is just doing this, and then price comes up, it didn't break any structure in here because this was one full leg. And what many people tend to do is they try to look for some buys in here. It's definitely not valid. It's not valid because structure is not broken. Unless we have something like this, then yes, you can look for buys because maybe you can look to target this supply zone right above to take price all the way towards the downside. You can definitely look for buys in this area right over here in this demand zone because price broke structure right over here. Keep in mind, if price does not break any structure like this, you shouldn't be looking for buys because that's not a valid demand zone. And also in the next few minutes, we're going to be talking about how to spot the best zones by using discounted and premium pricing model as well. So now the main thing is the supply zone is basically the last up move for the big down move that broke structure, and the demand zone is basically the last down move for the big up move that broke structure as well. This is not a valid demand zone because it didn't break any structure. This is a valid demand zone because it broke internal structure. So let's take a few look as well at some examples, and also we're going to talk about discounted and premium pricing as well, because that is also key in our trading as well, because it's really good to really refine your zone and spot the best ones instead of just lower quality zones. Now, let's take a look at these examples over here. Now, just ignore all of this. Let's take a look at one by one first. This is just examples. So let's take a look. So right over here, first of all, we have this strong down move. From this, we can confirm that sellers are in control. Obviously, we had a strong down move from this area. So obviously, you can see price tap into this area. And we broke structure right over here. We broke this structure, and we also broke major structure, which is this major low, which has been grabbed. So this confirmed that we are bearish, obviously, and we have a supply zone over here. Obviously, you couldn't really see the supply zone. If you move to like a 15-minute time frame, I think you can spot the supply zone. There you go. You have a supply zone over here, and this was definitely a valid zone because it broke structure as well. Now you can ask me, obviously, this is also a supply zone. Definitely, it's the last up move before the big down move, but it's not valid. Why isn't it valid? This is when we can use premium and discounted pricing model to refine your zone, to find the best zones. So if you take your Fibonacci tool, you can use the settings. Let me show you the settings. So it's basically this is my settings personally. So you just open the 0, 1, and the 0.5. This just to show that 0.5 is basically the half of it. So it's just going to be 50%, 100%, 0%, obviously. And this is going to be your entire range. Now, the top one, the 50% above right over here. So I'm just trying to adjust this a bit. Let's go. So the top 50% is going to be the premium pricing model right over here. So let me get my brush tool. So this area right over here is going to be premium pricing, which is where you look for sells. Zones that lie within premium pricing is where you look for sells. This is in discounted pricing. And if you're looking for sell, you don't want to be selling into any supply zone that is in discounted pricing. You want to be only selling in premium pricing. Yes, sometimes in discounted pricing, supply zones might hold, and those kind of case, it happens. Trading is not 100% of the time. It's not like you find a supply zone and that supply zone is the only one that's going to hold. Sometimes you'll be wrong as well. But to refine your zone, I backtested it, I forward tested it, I traded this strategy as well. Finding zones in premium pricing is better because it's above. That's how supply and demands work. People tend to sell at premium price and try to buy at discounted price. So you don't want to be selling at premium discounted price. Sorry. So yeah, this zone lies within the premium pricing, as you can see. So this the zone is in premium pricing, so that takes. And as you can see, what happened? Price tap into the zone and drop all the way towards the downside. Now, looking at this, let's remove all of these drawings. Now, looking at this, move back to the 1 hour. Right over here, we could say that, let's just move this zone as well. Right after this low is grabbed, this is definitely a breakout structure, but this also keep in mind a breakout structure is just a liquidity grab. We go into more details in this in our Discord membership and our crypto smart money calls as well. We get into more details of this, how to spot these liquidity grabs and breakout structures as well. In Discord community as well, we talk about this. We go into more details, I send analysis. I send a lot of analysis like this. Members are catching great trades based on the analysis we send every single week as well. So let's get into it again. So ever since this low has been taken out, this can be a breakout structure as well. It's definitely valid, but it's also a liquidity grab. Keep in mind when a structure gets broken, it's the same thing. It's still a liquidity grab, right? So we have a liquidity grab of this low and also a breakout structure. Keep in mind that buyers are still right. We are still bearish, right? But once this low gets taken out, you can see that here price started turning bullish right over here and breaking this internal structure right over here. This is a structure. Let me just label this. Let me just remove this first of all, so it's easier to see. This is definitely a breakout structure towards the upside. This is more like an internal breakout structure. You can see. If you move like a 5-minute time frame, I think you can see it. There you go. You can see this was the last lower high. If you go like a 15-minute, I think you can see it as well. This was definitely a last high. Even this one right over here is the last like lower high that was created and it was broken. So you can also pull your tool right over here from this entire pricing model and start trading off of it. Now, this is the thing. We look for supply zones in here to sell, but right before price was there, let's say price was here. All right. We know price wanted to move to the supply zone that we looked at previously, because that's where the entire order flow lies. This is bearish over here. So we know price is now heading towards that area. And still this zone is in the middle of this discounted pricing and premium pricing. So it's definitely still valid. If the zone is something like this, I wouldn't look to buy here. This is still valid. And we also know the overall direction is towards the upside. So we move to the 1 hour time frame. Now, this zone is definitely valid for buys, and also this zone. Two of this zone is definitely valid for buys. We can look for buys in both of the zone. And as you can see, price tap into this zone and started flying towards the supply zone. Now, we know that price wants to hunt this low, right? And as you can see, once you hit the supply zone, this demand zone, obviously, I personally wouldn't be looking to buy at this demand zone, but this is an example of how discounted pricing works. As you can see, this demand zone hold. Okay, but here I wouldn't look to buy anything because obviously for me personally, supply is in control right now. Demand is not in control. I'll definitely look to buy from here because price haven't tapped the supply zone, right? Right over here, price didn't tap into the supply zone yet. So this is definitely valid buys, but right here, it's not really a valid buy for me. But I just mark this to show you guys that it's in discounted pricing and we can monitor possible setups in the future just because price mitigated this demand zone. It also broke this internal structure. And now, right over here, as you can see, right over here, as price tap into this demand zone, what happened? Price broke structure again. Internal structure was broken. Multiple internal structure was broken. So this actually confirm our bias that, okay, fine, price is bullish, all right? Price wanted to move towards the upside. So you could be looking for some sort of buys in this new demand zone that created, that broke structure as well. But it's not really strong, as I mentioned, because main supply zone right over here that broke major structure is still in control right over here. So you could still look for buys. It'll be probably a short-term buys all the way towards the upside, then looking for sells again to continue towards the downside. That's what I will be doing personally. And we'll remove this. As you can see, as price tap into this, what you could be doing is moving on the 1 minute time frame, looking for confirmation. Even though this is such a small move right over here, but on a lower time frame, this is easily a 1 to 6, 1 to 5 risk to reward ratio. It doesn't matter the move is small in the 1 hour time frame. Even this entire move is definitely longer compared to this move, but still in this you can catch a 1 to 10 risk to reward ratio, 1 to 11 risk to reward ratio. It's easy. It doesn't have to be long, a big move. It doesn't have to be a small move. Even the tiniest move, you can move on a lower time frame and catch great trades based on it. So now we can know that obviously overall order flow is towards the downside. So you should be aiming for sells. If you're not experienced enough, you should be aiming for sells all the way down. But yes, you could take in counter trend trades as well, which is buys in this case. Now let's take a look. As you can see, price tap into this supply zone. And right over here, price wicked above the supply zone. Now, this is a concept that we teach in our Discord community as well, and also in our Crypto Smart Money course. This is a concept. It's a good concept to really look, because I know it's a common thing that some supply zones have to hold, all right? Price shouldn't wick above the supply zone, but some supply zones can be wicked above. In this case, this supply zone can be wicked above because that supply zone is being considered as liquidity. We get into much detail in the crypto course, Crypto Smart Money course, and our Discord community as well. I don't want to get into much detail here because it's too long of a video to explain about this. But in this case, this supply zone was definitely valid for grab of this liquidity. Now, this supply zone is still valid, obviously, as mentioned. So we can look for sells all the way down from this supply zone. And you can see right until your price tap, obviously, and then stopped us out. But still, this entire move right over here, we could have catch a great trade. As mentioned, this supply zone is much more stronger than this demand zone. The reason is because overall we are bearish. And see, this entire move right over here was longer than this move, was longer and much more. It's longer compared to this move, obviously. So it's a good thing as well. But keep in mind, we can still catch great trades in this move as well. It'll probably be a 1 to 6, 1 to 7 somewhere, and this will probably be a 1 to 10 on a lower time frame. Now, let's take a look. All right, so now in this sense, let me just remove all of this so it's easier to see. Let's do a much more greater analysis as well. So now we know from this low, once this low has been hunted, this supply was in control somewhere around here, right? This supply was something like this. All right, this supply was in control. So we know we wanted to hunt this low, but it doesn't matter. As I mentioned previously, look at all the trades that we could have caught. You know, you don't have to just sit around and like expect where's the brush tool? Expect price to just move all the way towards the downside to hunt this low and just wait all the way until you get stopped out at break even. Remember, in that entire move all the way towards the downside, look at the amazing trades that we get to catch. We got demand zones that we could have caught some beautiful buys from. There's some supply zones internally. There's this demand zone that we caught some buys from. There's this one as well we caught some buys from. Just look at all the moves that we could catch in price. When you're expecting price to move towards the downside, you're not just looking for one thing to happen. All right. The thing about we as traders is we're trying to play with price. We're trying to follow the price action. We're trying to follow the order flow of the market. Whatever the banks that is doing, we're trying to follow their footprints. We're not that sitting like, oh, this is my bias. My bias is going to hit all the way towards the downside. I'm going to stick to that. That is the wrong way of doing it. If price tells you that he wants to move towards the upside, change your bias. All right. It's simple as that. Change your bias to bullish. Don't try to stick and force the market all the way. I'm bearish on this. I'm bearish on this. You will get stopped out and you will be wrong. If price is showing that price wants to move towards the upside, switch your bias. You have to switch bullish. If price is showing that it wants to move towards the downside, then stay bearish, obviously. Do not ever force trades just because of your bias. You think that it really wants to move towards the downside. It's going to be wrong. Look at price, where the wish structure is breaking. internally, external structures, major structures or internal structures, which one are breaking. Major structures are always stronger than the internal structures as well. So keep in mind all of those and take trades based on it. Trade and follow the market. Don't just simply force buyers on something. All right, so let's take a look. So ever since, remove this. So obviously this low has been hunted, as you can see. Then we have a break of structure towards the upside. Now this confirms our trend that we are considered bullish right now. Let's take a look right now. And right over here, I'm marking all of this zone so it's easier to explain, by the way. So ever since this strong drop over here, this is the last up move before the big strong down move, as mentioned, what the supply zone is right over here. So this is the last up move. As you can see, this is the blue candle before the last big down move that broke structure. As you can see right over here, it broke structure. It broke this low right over here. It broke this low as well. And finally, this low as well. So from here, also, okay, so price is bearish ever since this high has been taken out, which this is the break of structure, but as mentioned, a break of structure could be a liquidity grab as well. So in this case, it was a liquidity grab failure because price shift structure as well right after grabbing this high. So right over here now, I'm interested in sales. I'm going to be looking for sales from this supply zone. That's my main thing. But I don't have to wait until price reaches the zone. That's what I said just now. You don't have to wait until the full movement happens. You can still catch great trades in between that movement, if you know what I mean, like something like you're expecting price to move all the way towards the downside. So this would just be one trade. But just look at all the amazing opportunity you missed if you just wait for that entire move towards the downside. Now, so there's this supply zone I was looking to sell from, obviously. So I'm waiting for price to reach over there. And right over here, amazing. We had a shift of structure as well. So in this case, as you can see, in this case, we can look for buys from this demand zone to target all the way towards the upside. And this supply zone is definitely still valid. It's because it's still in premium pricing. And right over here, this demand is also in discounted pricing. So it's good to look for buys from. Let me just show you from this high. So from this low to this high. This demand zone is in discounted pricing. So it's definitely a good buys from this zone to target the supply right above. And as you can see, price tap into this demand zone, went all the way towards the upside, breaking this structure as well. So this would have been a great trade as well. Okay. So right over here, as you can see, as price tap into this demand zone, let me just remove this. Price tap into this demand zone and move all the way towards the upside. So this would have been a great trade on a lower time frame. I mean, in this time frame, this is the 1 hour time frame. If you place an entry over here, stop loss right below the lows. Remember to always I'm going to give you a tip right now. Don't always put your stop loss right below the demand zone. You will get stop out. Sometimes price like to do this thing where we call absorption. Remember I told you that some demand zones when you wick below is still valid. This is one of the demand zone as well. And we get into much detail of this as well. I don't want to talk about it here, but make sure to keep it a few pips below to like counter for spreads and stuff like that, and also kind of like a wick below the demand zone or wick above the supply zone as well. So we could, even with this, without confirmation as well, this was what, like a 1 to 5 restore ratio. This is amazing. 1 to 5.3 restore ratio. On a lower time frame, this is easily 1 to 10, 1 to, it'll be something like this. It'll probably be something like this, break of structure. Yeah, it'll easily be a 1 to 10, 1 to 9, something like that, a lower time frame. And as you can see, price tap into our supply zone and is now shifting bearish. Right away, yeah, shifting bearish. So this is it for this video. I hope you guys enjoy it. Please watch this video more than once if to really understand this concept. These are all great things to apply to your trading. And I'll see you on the next one. Take care, guys.